The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Joe Bachala, Director of Client Success at Chaikin Analytics, and I'd like to welcome you to How to Harness Today's Volatility for Winning Options Strategies. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, along with Tony Zhang, co-founder of OptionsPlay. A Wall Street trader, stockbroker, and analyst for more than 40 years, Marc created the Chaikin Power Gauge Rating, a proven 20-factor model that uniquely combines fundamental and technical factors. Tony Zhang is an accomplished capital markets and derivatives specialist with a passion for building and designing innovative trading tools. As the current head of product strategy for OptionsPlay, he has assembled a team of developers, designers, quants that has led OptionsPlay to creating one of the newest innovations in options trading and analysis. As a reminder, this webinar is being recorded and will be sent to all registrants. Please submit your questions via the GoToWebinar chat window. To get us started, here's Marc Chaikin.
Thank you, Joe, and welcome everybody, and thank you for taking time out of trading holiday to learn some really valuable techniques and tips on how to turn volatility in your favor, particularly during earnings season, which we're just now wrapping up. In this afternoon's webinar, you'll discover how to use the Chaikin Power Gauge Rating to make money in earnings season. You're going to learn how to turn lemons into lemonade by playing good defense and putting that to work on the short side. We're going to teach you how to save time and simplify options trading. Probably the most valuable thing we all have is time. We don't have enough of it. It's a precious commodity. And you're going to learn how to quickly and easily find the best options candidates using OptionsPlay, something that Tony created and we've integrated into Chaikin Analytics. So a little bit about myself, for those of you who don't know me, 50 years on Wall Street, lived through 10 bear markets. Hopefully that's not going to be relevant. If we made a W bottom here, we're going to look at the market in just a minute. I was head of the options department at a great regional firm called Tucker Anthony and R.L. Day for 5 years and integrated technical analysis into options strategies. And technical analysis is something that I've been using for 45 years along with fundamental analysis. I think it's the most powerful combination for finding the right stocks. OptionsPlay is the most powerful combination for finding the right option strategy. Along the way, I've been mentored by some of the smartest and most successful institutional investors. And what I learned from them is reflected in the Chaikin Power Gauge Rating, which is the culmination of my life's work. And we're going to describe the Chaikin Power Gauge Rating briefly to you because it's so central to everything we do at Chaikin Analytics and to our subscribers' ability to make money consistently in the stock and options market. Now, I've been fortunate to be seen on Fox Business, CNBC, to be quoted in Forbes and MarketWatch, and just 2 weeks ago, we were written up in the electronic investor column in Barron's. A very favorable write-up by Mike Hogan. And in the interview that led up to that article, Mike said to me, "Marc, you've run an options department. Why did you license OptionsPlay instead of building it yourself?" And I said, "Mike, because it's the best in breed." And it would have taken me a year, my team, to figure this out. And when you've got the best in breed app that you can license and offer to your subscribers, you just do it. Why waste a year when there's so much money to be made in options? So Mike mentioned OptionsPlay very favorably in the article as well. I'd like you all to meet Tony Zhang. And Tony, why don't you introduce yourself to the folks?
Thanks, Marc. My name is Tony Zhang. I run product strategy for OptionsPlay. So I help design and build the OptionsPlay platform that we're going to see in the demonstration in a little bit. And just to give you a little background of how we built OptionsPlay, we really looked at the typical workflow of a options trader, and we looked at how people learned options, and we realized there was a significant amount of work that someone needed to do before they're even able to look at an option strategy, evaluate it, and see if it fits within their portfolios or their strategies. So what we set out to do was build a platform that allowed anyone to view and research option strategies and learn about them without necessarily having to know much about them, and very quickly be able to see the proper indicators to decide whether or not an option strategy is suitable for the stock they're looking at, whether it's suitable for the view they have on the stock. So that's what we're going to show you today, is how you can very quickly type in any symbol and get a view for whether it's bullish, bearish, or income strategies on any underlying stock. Just like how the power gauge, which Marc is going to show you, is very quickly going to show you the power of the Chaikin power gauge to give you an idea as far as the bullish or bearishness of a stock. So I started my career at Gain Capital as a market strategist on the FX side, and that's kind of when I learned about options trading and decided that we were going to build OptionsPlay, because the existing platforms that are currently out there just didn't quite give me what I needed in order to view strategies next to each other, find the strategies that I was interested in without having to do a lot of research. So that's what we're going to show you today.
Tony, thank you very much.
Thank you very much.
I'm hearing an echo, Joe, but hopefully the folks aren't. I thought I'd start out by just looking very briefly at the overall stock market, because so many people are concerned about the market. In fact, I'd like to start the webinar off by asking you to type into the chat box what your biggest concerns are right now. Are you concerned about the direction of the market, about whether we're in a bear market, whether you should be defensive or committing capital? And so if you would just type in the question box your biggest concerns, that'll help me focus on them in the course of the webinar. And Joe, once people have had a chance to do that, you might just give me a little flavor of what people are thinking and concerned about right now.
Let's see, the two that stand out to me right now, I see two people, Ward and John just mentioned, when are we going to find the bottom? And when exactly can I commit capital? So it looks like being able to just spot the bottom of the market and put cash to work.
And I would imagine volatility is a big concern to people, because it's been so volatile, particularly since the market peaked in November.
Volatility,
so
big one listed here as well. Yeah.
Big one, yeah. So let's look at the market. I think it's important not just to find the bottom, but also to know what to do on the rallies. So what we see here is a one-year chart of the SPDR, the most actively traded ETF, which represents the large cap S&P 500 index. We made a W bottom, a bottom in the shape of the letter W back in August, September, as you know, and we rallied up. And when we couldn't get through the previous resistance at 2100 on the S&P 500, we started back down again. And the reasons are pretty evident. It's the Federal Reserve raising interest rates in December. You can see that relative strength sell signal that we had up here in December, right after the Fed raised rates for the first time. It was well known that they were going to do it. You also had the problem with the Chinese currency being devalued, the yuan. And in response to that, just last night, the head of the People's Bank of China said that they were going to defend the yuan and not let it get devalued. Now, you can't always believe the Chinese, but for the time being, that sparked a 30-plus point rally in the futures on a day when the stock market is not trading. But we'll see how that all plays out tomorrow. But more specifically, right here on the right side of the chart, I sort of anticipated that question about when are we going to see a bottom. And the question is, have we seen another W bottom? It's possible. We rallied very sharply intraday on Thursday, and then again on Friday we closed right at the highs, and the futures are up 30 points or so right now. Notice that on the right side of the W, in other words, you trade down on heavy volume, you rally up just like you did in September. These patterns repeat over and over and over again. The last serious one was in 2011. Chaikin money flow, which is highlighted in that red box, which measures institutional buying and selling over a 21-day period, was actually green when you made that low last Thursday. That's very positive. it was red or negative when you made those highs back in November, December. So the internal breadth numbers have improved a bit. It is possible, but not likely in my view, that we've made a W bottom. There's a lot of overhead resistance at 1900 and 1950 and then 2000 that you can see here on the chart. So the overall picture for us has been defensive since the middle of December. We've recommended being 30% in cash in our weekly Market Insights newsletter. We've also said that you can buy stocks with a bullish Chaikin power gauge rating on extreme weakness only, and we're going to see an example of that, and then Tony's going to get into the option strategies on both bullish, bearish, and income-related stocks. Now, I'm a firm believer that if you're going to do a buy right on an income stock, you want it to be at a minimum neutral, but ideally bullish, because you don't want to lose more money on the stock than you're going to make on your dividend plus option premium. So let's look at one other market chart, which is the Russell 2000. One of the questions we get often is, are small caps ever going to turn around? Because small caps have been in their own bear market, as you can see, for quite some time. I've highlighted with that yellow zigzag when the IWM, the Russell 2000 small cap ETF, started underperforming the large cap S&P 500. All our relative strength indicators compare any instrument to the S&P, and that was in mid-July. And along the way, you've had ample opportunities to go short. You did make a W bottom along with the broad market, but the rally was tepid and we broke those lows, whereas in the S&P we only equaled the lows last Thursday, Friday. We broke those lows decisively in December, and we've had a very weak rally ever since. Now, because we broke those lows in December, on January 3rd in my weekly market letter, I made the IWM my bearish ETF of the week. And here's an advanced preview of what OptionsPlay can do for you. Based on the OptionsPlay module and the fact that the IWM was underperforming the large caps, I was looking for a bearish strategy, and I found it on OptionsPlay. And at that point, the Russell was at 112.62, and OptionsPlay found a vertical put spread with limited risk, but plenty of potential, the potential for almost a 200% return. So it suggested buying the 113 put, which was slightly in the money, and selling the February 108 put. Total cost of the spread, $169. It worked out magnificently because, as you saw, the Russell just dropped like a stone in early January, and that trade was maximum profit almost immediately, and could have rolled that into another spread and benefit even further when the Russell went down to 95. So this is what you're going to be learning about in today's webinar, how you combine Chaikin analytics and OptionsPlay to make money in options without having to be an options pro. So why is this combination of Chaikin analytics and OptionsPlay so powerful? The reason is that information overload is our biggest problem in our daily lives and in the stock and options markets. As a trader or an investor, there's just so much information. So at the middle of this chart is the key question. How do you focus in the age of distraction? And our answer to that is Chaikin analytics, which now includes a stock screener and OptionsPlay. It's the answer to information overload. It helps you focus on just what you need to know. And Chaikin analytics does help options traders because we give you a directional edge. When I ran an options department, my directional edge was technical analysis, but I always knew that fundamentals drove the market, just didn't have the tools to analyze the fundamentals for 1,500 or 2,000 optionable stocks. Chaikin Analytics does that for you with the power gauge rating. We analyze the fundamentals with the power gauge rating on the charts along with the power gauge rating of the technicals. It all boils down to a 20-factor quantitative model that pulls everything together, and as Tony said, it helps you know which stocks to be for long or short strategies. And most importantly for options traders, we have 6 pairs of Chaikin buy-sell signals to help give you better options entries. Obviously, entries are absolutely critical. My favorite New Orleans blues singer, Dr. John, had that great hit song in the 70s, I've been in the right place, but it must have been the wrong time. Well, how many of us as options traders have experienced that? We were right on the stock, but wrong on the timing. If you've actually experienced that trading options, type a big Y in the question box, please. And I see that all of us have suffered from poor timing. Our signals are going to try and help you with that. Now, with the OptionsPlay integration, you can auto-generate strategy ideas based on risk, reward, and probability. The same probability-based approach that we take in the Power Gauge Rating, OptionsPlay takes in their strategy ideas. You can toggle through 5 interactive panels, as Tony will show you, to fine-tune your strategy in plain English. And then you can strategy to match your own investment risk limits. Tony's going to show you how you can change the assumptions within OptionsPlay to match them up to the assumptions that Chaikin Analytics gives you. So the centerpiece, as I said, of everything we do at Chaikin Analytics is the Chaikin Power Gauge Rating. It's a reliable indication of where a stock's headed over the next 3 to 6 months. And if that sounds long for an options trader, it's not. It's the right time framework, because the stocks that are going to go up in the short term, or if you're a swing trader using options, are the stocks that are also going to outperform the market over the next 3 to 6 months. So you don't get to be a market outperformer 6 months out in one big leap like Superman. You get there step by step every day by outperforming the market on up days and giving back less on down days. So the Chaikin Power Gauge Rating is a very simple display. Looks like the gas gauge on your car, doesn't it? Well, when the gauge is very bullish, it's like having a full gas tank. You can drive a long way on that. And the Power Gauge Rating is also your GPS during earnings season, which is absolutely critical, because you can make a lot of money in earnings season if you have that directional edge about where the stock is likely to go. And so I feel confident saying this because the Chaikin Power Gauge Rating, which has 20 factors grouped into 4 components, is based on what I learned looking over the shoulder of successful institutional investors. I had to do that in order to sell them my technical analysis approach in the late 80s and early 90s. In order to be effective at showing fundamentally oriented portfolio managers, and believe me, they're the people who drive the market, not just at the big institutions like Fidelity and T. Rowe Price, but also at the hedge funds. They typically rely on some sort of fundamental model, maybe a little bit of inside information every so often. But these are the factors that institutional investors look at every day. Now, they don't all look at all of these 20 factors. The financial metrics are the bedrock of the model. This is what value investors look at, and they don't change very often. It's what Warren Buffett looks at. But particularly relevant to today's webinar and to how you make money during earnings season using options is the concept of earnings surprise. It's one of those concepts that I learned from one of my mentors at Drexel Burnham, George Douglas, who did the pioneering research in earnings surprise and earnings estimate revision. So I'm sure all of you have seen how companies that report positive or negative earnings surprises tend to have big gaps the next day. Wall Street doesn't like surprises. And the interesting thing is that earnings surprises tend to come in bunches. You don't get 1 quarter of a negative earnings surprise or a positive earnings surprise. You get 2, 3, 4, or 5 in a row, which is one of the reasons that it's a factor in the Power Gauge Rating. And one of the things I learned from George Douglas is that earnings surprises lead to analysts revising their estimates up and down. We call it earnings estimate revisions or earnings estimate trends. And the reality is that earnings estimate revisions are the single biggest short-term driver of stock price movements, and they feed off earnings surprise. And the Power Gauge Rating can help you predict which stocks are going to report positive or negative earnings surprises. So there's this virtuous circle. Analyst expectations, surprises both up and down, leading to estimate revisions and analyst rating changes. That's why the Chaikin Power Gauge rating is your GPS during earnings season. Now, a little bit about the performance. This combines back-tested and real-time results. Power Gauge rating has been available, commercially available for 5 years, since January of 2011. Initially, it was in the form of research reports on 5,000 stocks updated nightly based on the Power Gauge rating. Now it's desktop and iPad analytics workstation for traders and investors. The average very bullish stock in the Russell 3000, all 428 of them at any given point in time, have been up almost 20% annually since 1999. The average very bearish stock has been down 1%. And when you look at the Power Gauge performance in 2015, you realize why you can make an awful lot of money during earnings season using the Power Gauge rating and OptionsPlay. The average very bullish stock was down 1% in a time when the average stock in the Russell was down 8%. But look at the very bearish stocks, down 17%. These were the Kinder Morgans, the Range Resources, the railroad stocks like Union Pacific and Kansas City Southern, and more recently the LinkedIns and Teslas and Tableaus of the world. It's that spread between very bullish and very bearish stocks and the ability of the Power Gauge rating to pinpoint the stocks that are likely to report negative earnings surprises and underperform the market that makes the Power Gauge rating so valuable. Now, we've identified patterns that we call classic Chaikin bulls and bears. Just a very brief few seconds on that before we look at a powerful combination and then turn it over to Tony to work his magic in Chaikin with OptionsPlay. Classic bull has a bullish Power Gauge rating, which means the fundamentals are lined up positively, outperforming the market with strong Chaikin money flow, indicating that the institutions are accumulating the stock. So here's a one-year chart of Atmo. The market's in a very defensive posture right now. The strongest industry groups are in the utility sector, water, gas, and electric. And Atmo is in the gas distribution industry group. It's not important where the stock is now in terms of the Power Gauge rating, which is bullish, but when did it go bullish? Mid-July. And shortly thereafter, the stock started outperforming the market. How do we know that? Because our relative strength indicator is a heat map right above the Power Gauge rating, which is at the bottom of this one-year chart. We look back over 6 months of data, we smooth it out, and we created an indicator that tends not to be choppy. It stays bullish or bearish for long periods of time. So the ideal bullish play, from my point of view, in the options market is when the Power Gauge rating is bullish, so the fundamentals are on your side. Stock is outperforming the market, so the market is agreeing with the model, because no matter how good your model is, if the market doesn't agree with you, the market always wins. And then look up there at the Chaikin money flow, which is available on every one of your discount brokerage platforms like Thinkorswim or Options House or Schwab, Merrill Edge, as well as on stockcharts.com. What we do that solves the information overload problem is put them all together on one chart where the Power Gauge rating rules and the other indicators confirm, and then you've got those signals we talked about, in this case relative strength sell signals. So here's a very mundane company with a yield of 2.4%. It had 3% yield when the move started. That's gone from 52 to 71 in a terrible market with a bullish Power Gauge rating. That's the power that we bring to your trading. Now, classic bear, the opposite, turn it on its head. Bearish Power Gauge rating, meaning the fundamentals are terrible. Weak performance relative to the market, and Chaikin money flow, red not green, telling you that the institutions are selling the stock whenever they can. Now, Kinder Morgan is our poster child. Before that, it was Wynn Resorts. Before that, it was Triple D in the printing industry. So over the last 3 or 4 years, the Power Gauge rating has identified these stocks. So on the bottom negative power gauge rating. A lot of people were seduced by 20% yields in Kinder Morgan before they cut the dividend. In mid-May, it started underperforming the market. The stock was around 39.40. And look at the institutions. They were selling this stock every chance they could get. But if you're following Chaikin, you are out of it and looking for shorting opportunities. These are money flow sell signals. Now, I've circled Friday's action when Kinder Morgan was up $1 because the price of crude oil jumped 12%. So it was up 7% on Friday. Volatile markets require discipline, and at some point Kinder Morgan will run into resistance and then be a good put candidate yet again. I talked about the power gauge rating and relative strength. We call that the dynamic duo, and it helps you find big winners and big losers, which means that you can be a big winner in the options market. Superior returns come from stocks that outperform the market. Inferior returns come from stocks that underperform the market. So let's look at 3 examples of that, and then I'm going to turn it over to Tony because he's going to work his options magic with OptionsPlay and Chaikin. First example is a bullish example. First Solar Corporation, arguably the blue chip in the solar industry. I like the solar industry. This company has revenue, $3.6 billion. They've got earnings. They've got Goldman Sachs recommending it, which is why it spiked up to 72. They have very little debt and a lot of cash on their balance sheet. Do you have to know all that to make money in First Solar? Absolutely not. Just look at the power gauge rating and the relative strength. So after a bearish rating back in late April when the stock dropped from 55 all the way down to 40, the power gauge rating turned bullish again in August, but the stock was underperforming the market. And then when the relative strength turned positive in mid-October, the stock, which was at about 47.48, took off on a run to 72 when Goldman recommended it. This stock triggered an oversold buy signal based on Friday's sell-off, along with other solar stocks which were down 40+% last week alone. First Solar is the standout candidate. Now another stock that the power gauge is bullish on is in one of those utility sectors, electric utilities. This is Entergy. Power gauge turned bullish in mid-December. Stock was trading at about 66. Started outperforming the market. The institutions have been accumulating this all along. It had a 5% yield back then. Now a 4.83% yield now and a bullish power gauge rating to me means this is a great buy right candidate, and Tony's going to show you how you do that. And you had a relative strength buy signal here just recently, and the stock spiked up and made a new 6-month high. This is how you can use this combination to make money. And on the downside, Tesla. I've called Elon Musk the P.T. Barnum of Wall Street. He gets away with more propaganda, hype, and PR than any CEO on Wall Street. Jim Cramer has put him on his wall of shame. Now, why is that relevant? Because periodically Tesla will report earnings. They tend to disappoint, but Elon Musk, the CEO and the founder, puts a positive spin on it. And we just saw it last week where after earnings were reported, they were awful. Elon Musk said, well, we're going to beat delivery estimates for the next quarter. The ran up to 163 in the after hours trading, but look where it ended the week, just 2 days after earnings were reported, 151. There are bearish opportunities in stocks like Tesla if you follow the power gauge and not the hype from the CEO. So with that, I'm going to go to my Chaikin Analytics screen. And Tony, take it away. Work your magic, please. And Joe, I'm sure you're passing Tony.
Yeah, actually, so since we're having a bit of a tech issue with GoToWebinar, Marc, on your GoToWebinar control panel, there's an option that says give keyboard and mouse. I want to make sure that we do this smoothly. So if you just select give keyboard and mouse.
Give it to Tony.
Give it to Tony?
I'm giving it to Tony.
Perfect. And Tony, let us know if your cursor is working.
Yep,
there it is.
Yep.
All right, fire away.
Thanks, Marc. Thanks for that great introduction on the power gauge, and it just goes to show you how powerful that gauge is and how quickly you can disseminate the information, whether it's fundamental and technical analysis, and very quickly understand whether you're bullish and bearish on a stock. So now what we're going to do is we're going to parlay that into how can you use options for these underlying names that you're interested in. We're going to show you. So right off the bat, you're going to see there's going to be a button called Options for any symbol you type in. So click on that to launch OptionsPlay. And what that will do is bring up a screen that looks like this. Now, first off, what I'll do is I'll just give a quick overview of the OptionsPlay widget, and then we're going to dive into how you can use it to find bullish and bearish strategies. So for any symbol you type in, you click on the OptionsPlay button and it launches this window. You're going to always be presented with three options. You're going to see I'm bullish, I'm bearish, or income. Now, whichever one you choose, it will show you either 3 bullish strategies, 3 bearish strategies, or income strategies. So we're just going to each one separately. Now, when you click on I'm bullish, you're going to see 3 strategies, and think of these as starting templates, meaning if you're bullish on this stock, what are your possible choices? So what we do is we always start with long stock, which is something that everyone should be familiar with or understand how that works. What we're going to compare this to in the middle is a call option. This is for those of you who are new to options. This is a simple strategy, the simplest strategy you can take to take a bullish view on a stock. And for those of you who have a bit more understanding of options, we have a call vertical, or some of you might know that as a call spread, which is effectively the same thing as buying a call. At the same time, what we're doing is we're selling a higher call against it. And what that does is simply generates a little income on buying the straight call, and what it does is reduces the cost of trading a long call from $685 down to $566. That's about a 15-20% savings there that you can reduce the cost of your overall trade by if you're trading the call vertical. Now, the way OptionsPlay is set up is it allows you to compare strategies side by side. And we built this in a way so that you don't have to go through an option chain to pick a strategy, to pick a strike and an expiry before you're even presented with something to analyze. What we do is we take that all out of the picture and we immediately present to you 3 strategies that you can look at. And depending on whether you're new to options trading or more advanced to options trading, you select the strategy that kind of fits your risk profile and allows you to compare the 3 side by side and kind of see which one suits you best. Now, most trading platforms will present you with analytics that look like this: cost, max reward, max risk, probability of profit, the break-even price, number of days to expiry. Now, these are all great stats, and these are stats that you typically will need to know before you execute an actual trade. But in order to compare a lot of these stats, especially when you're comparing strategies that have unlimited reward to strategies that have limited reward, or strategies with limited risk to strategies with unlimited risk, it becomes very hard to compare the different strategies and say which one's best for me. And that's why the OptionsPlay platform actually summarizes all of that into a single score for you. This gives you a better representation of how good each strategy is compared to next to each other, and we summarize it in the OptionsPlay score. And just in layman's terms, the OptionsPlay score is actually quite simple. All it is just the amount of green, or what we call the potential reward you have on a option trade, versus the potential risk, or the amount of red that's available to, that you see on your screen. So what we're trying to do is give you a better feel for what is your potential reward versus what is your potential risk, and give it to you on a gauge so that you can compare strategies side by side. So as you can see on these 3 strategies that are available to you, the call vertical or the call spread gives you the highest score because it gives you the best possible risk-reward ratio as a starting point on for First Solar in this particular case. Once you have these 3 strategies presented to you, you're going to see on the bottom we have different panels here to help you fine-tune each strategy, figure out which strategy is best suited for you. So we're just going to go through them one by one. The P&L simulator is quite straightforward. It literally simulates the profit and loss depending on what your view on the particular stock is. And you can either type in a specific price or use these sliders and kind of see how each one of these strategies change. And you can see the dollar amount and the return of each strategy next to each other for any given strategy that you present. So as you slide the slider higher, as you think First Solar's price is going to go higher, you're going to see which box highlights in blue which tells you which strategy gives you the highest return. And vice versa, if First Solar was to drop in value, you'd also see how much you lose and what the return is on each strategy compared to each other side by side. So this is just a quick simulator to give you an idea as far as which strategy gives you the highest return for any given scenario. We also have a plain English tab. This is for more of the beginners who are new to options trading, who are trying to learn what this call vertical means or what this call is. And if you're just learning how to trade options, this is a very powerful slide to be looking at to understand the strategy itself. So you understand this is a bullish strategy with limited risk, and it tells you that the stock has to reach 66.16 by April 1st before the strategy is profitable. It just teaches you what the strategy is, what it takes for the strategy in order to be profitable, and what the probability of that actually is. We also have a trading range simulator. I had talked about the options play score is basically calculating how much green there is or how much potential versus how much risk there is. But what we do is we calculate how much risk and how much potential there is within a given range. And we start but with a 1 standard deviation range, meaning what is and we define that as a likely range that the stock will trade in between now and the expiration date. However, for those of you who are a bit more advanced, who have traded options before and understand volatility, you may have a different assumption on that. You might think the stock is going to trade in a very wide range. Let's say earnings are coming up. Those are the times where you may want to say, what happens if this range trades in a wider range? Notice that the scores are now recalculated because now we're looking at a different range. There's now different risks and different potentials for reward in that new given range, and these scores are recalculated. So notice how when I drag this range a little higher, this call option now gives me the highest score. So this, again, is more for the traders who have traded options a bit before, who understand volatility a little bit more. Like I said, around earnings, volatility tends to get a little higher, and right after earnings, volatility tends to get a little lower than normal. So then you can adjust these to see how the scores of each strategy changes next to each other. And we'll show you in an example a little bit as to how you can use this for trading around earnings. And lastly, we have the modify button. This just allows those of you who have traded options, who want to play around with these options or modify them and see how these scores change. This allows you to modify each one of these strategies. You can change the expiration dates, you can change the strike prices, you can change anything you'd like, literally, in order to modify these strategies. Or if you have a predefined strategy that you want to modify this to, we also have a selection of over 50 different strategies you can select from. So if, let's say, you wanted to take a look at what happens if I was to go trade a long collar, you can create these strategies on the fly, and these templates are available to you to create any of these strategies and see how they compare next to each other. But we'll just go back to the reset likes just so we can look at the original strategy. Oops, sorry. So going back to First Solar, like I said, when this is the stock on the power gauge rating, we have a very bullish rating on. So what we're looking at is 3 bullish strategies. Using the P&L simulator, we're able to see very quickly which strategy gives us the highest return on a, let's say we think First Solar is trading at $61. Let's say we think it's going to go to $70. We can very quickly see the strategy on the right of this call vertical gives us a 67% return if it does go up to 70 versus only a 38% return for just buying the call. This gives me a very quick indication that this is that if I was interested in a bullish strategy, I'd be looking at this call vertical to take a look at for trading, just simply because of the sheer return that it'll give me if the stock goes higher, and the options play score. It gives me a better risk-reward ratio. So if, let's say, this is the strategy that I'm interested, when I click trade, you're going to notice it'll bring up a trade ticket, which first gives you the required information you need in order to enter this trade into a brokerage firm. So it'll tell you the definition of each leg, what you need to enter, the premiums for each leg. It'll also give you an idea as far as the current bid-ask of the strategy. And then you'll notice a thing called the strategy checklist. This is something that I highly recommend most users take a look at before they place any trades. Think of it as the last step of validation that that we created that we noticed that most options traders will tend to overlook sometimes when they're placing an options trade, just because there are so many data points and analytics that you're looking at before you place any option trade. We tend to find that there's always a good chance that you overlook a couple of them. So what we did is we created a checklist that just gives you a last-minute validation before you place any trade. So first of all, what we typically look at is the trend of the stock compared to the overall market, the trend of the stock to the the sentiment of the strategy that you're trading. In this particular case, a bullish strategy compared to the trend of the stock, the trend of the strategy compared to the trend of the overall market. We also look at the OptionsPlay score. We also look at whether there's earnings between now and expiry. So it looks like there is an earnings between on February 22nd. And lastly, we look at the bid-ask spread. So we give you an idea as far as how liquid this option is based on the spread of the bid and ask of the strategy, to give you an idea as far as liquidity, because generally speaking, when you're trading options, you are kind of worried about liquidity and how easy it is to get in and out of a strategy, versus a stock. Typically, you don't have that same, you don't have to worry about that, generally speaking. So the strategy checklist is something that you should definitely take a look at next time you place an options trade, just as a last step validation before you go ahead and place that. So that's the first solar example, where we're looking at a bullish strategy, a bullish stock. We're looking for bullish strategies. You type it in, you click on I'm bullish, and you'll be presented with 3 bullish strategies. So let's take a look at a bearish trade, the Tesla trade. When you click on Tesla, you'll see that it'll automatically populate into I'm bearish. And this is driven by the power gauge. So we've already done this in integration, where for any stock that you type in, if the power gauge is bearish, you're going to be immediately presented with bearish strategies. For those of you who are contrarian, who want to trade against the trend, you're always free to click on the I'm bullish button and be presented with the 3 bullish strategies for Tesla. But again, we always default to what the power gauge says. So in this particular case, when we look at Tesla, this is a bullish trade from the power gauge. So what we're looking at is shorting the stock as a strategy for a bearish, if you're trying to trade the stock. We have a put option, which is a bearish strategy for options. And then we have what's called a put vertical, which is similar to what we just looked at for the call vertical, but a bearish strategy for this. And again, just like the put, what we're doing is we're buying the put, and we're selling a lower put against it. And what that does is it generates a little income and reduces the cost of buying that from $15.20 down to $12.46. So again, another 15% savings on your on the cost of the trade. And because these are all limited risk strategies, the amount that you pay is the amount that you're limited to in terms of risk. So the lower you pay, the lower risk you have on the overall strategy. And that's why, and that's really part of the power of options plays, that we've already optimized this put vertical for you, so that what we're doing is we're trying to reduce the cost of the overall trade for you without having to, and what we're doing is we're automatically selecting a strike that we think that Tesla won't go below between now and expiration. So look at Tesla's trading at 151 right now. We've automatically selected the 115 strike for you. What that means is we don't think Tesla's going to go, we think there's a very relatively low probability of Tesla going below 115 before the expiration date. In this case, which is 46 days away, we're saying within the next 46 days, we think there's a low probability of Tesla going below 115. And what that means for you is that by selling the 115 puts against it, we've reduced this overall cost of the trade for you. So that's the power of options plays. You don't have to go through the options chain to look at probabilities, to look at expiration dates, look at different strikes to select which strikes you want to sell or buy. We've already done a lot of that legwork for you so that you can analyze and view the power of options, being able to modify these P&L simulators and be able to see which strategy gives you the highest return. Really puts you leaps ahead of someone who's just starting out in options, who has to look at an options chains page and pick out all these strikes and options in order to even look at before they're even able to decide whether this put strategy is suitable for them. So once you have this tool, all you have to do is type in the symbol, look at the power gauge rating. Once you have an overall view on the stock, whether it's bullish or bearish, very quickly be able to find the strategies that are at least suitable for a bullish or bearish move in this particular stock. and very quickly say, hey, if this is the one that I want to trade, click on trade. Being able to see all the details of the trade, having a strategy checklist that goes through the different trends and making sure that you kind of have all your dot all your I's and cross all your T's before you place a trade. And once you place the trade, you can be confident in that you have the right direction because of power gauge rating, and that you have the right option because you've used the OptionsPlay software and looked at the trade checklist. And in this particular case, notice how I have 4 green dots and 1 yellow dot. These are all great indicators that let me know that if I'm bearish on Tesla and I'm looking for a bearish strategy, that this put vertical is a great strategy to be taking a look at. Marc, you already went through ETR for the income strategy, correct?
Yes.
Okay. So lastly, we're going to take a look at is income strategies. So those of you who own stock, and this is a stock that, as Marc was saying, is what just happened? This is a stock that Marc was taking a look at. The power gauge rating just went green. Notice how the relative strength changed from bearish to bullish. This is a stock that perhaps you might be owning in your portfolio. One of the ways that what we should consider doing with stocks in the portfolio that we own for a while is generating income against it. So as you can notice that when you launch OptionsPlay, when you click on I'm bullish, I'm bearish, you're presented with bullish or bearish strategies. When you click on income, you're going to be presented with income strategies. Now, first what we're going to do is, what I want to do is, if you don't mind, Marc, is I'm just going to show an example of, let's say, Apple. Apple is more of a volatile stock. It's large cap stock that typically has lots of options available. When you click on income, you'll typically see a message that looks like this. And what this means is that OptionsPlay has automatically found an optimal income strategy for Apple. Now, this covers both the covered call strategy, which for those of you who are familiar with the strategy, it's buying 100 shares of stock and selling an option against it to generate some income. And for those of you who are more advanced, who might be trading short puts, this is another income strategy that you can use if you don't own the underlying stock. This is an income strategy you can use if you want to get into the stock by selling puts against it, and if it gets exercised, you end up with 100 shares of the stock. So these are the 2 income strategies that OptionsPlay will automatically try to find on your behalf for any symbol that you type in. Now, some symbols you type in, you're going to see a message that looks like this. Like I was showing before, where it says OptionsPlay has not found any did not find an optimal call or put to sell against. Now, that's okay. There's a couple of reasons this could happen. It's because perhaps stock doesn't have enough volatility, or perhaps earnings is coming up. You can always click on click here to still view strategies. So what we're doing here is we're going to take a look at a covered call opportunity. This is if you own 100 shares of the stock. So let's type in, and you can type in the number of shares that you own. Let's say you own 1,000 shares at $70. Oh, whoops. Let's type in 70. Let's say you own 1,000 shares at $70. What it does is it will still go and try to find strategies for you. So what we're doing here is we've taken a look and we've found the March 75 calls for you. And what it does is it presents the same type of analytics as you have on the bearish and bullish strategies, except this is for income strategies. When we're trading for income strategies, there's one indicator that we're very interested in. We call it the POW indicator. It's the probability of expiring worthless, because when you're selling options for income, you generally speaking want these options to expire worthless. What that means is that you keep all the income from selling that option, and you get to do it all over again next month. And what happens is, what we're saying is that if you sell the March 75 strikes, first of all, you're going to bring in $550 of income in 32 days. So, and the idea is that you want to try to bring in that income and keep it and do it again in 32 days. And what we're telling you is that there's about a 79% or 80% probability that this option will expire worthless, or another way of putting it, ETR is trading at $70 right now. We're saying there's about an 80% chance that ETR will not go above 75, which is the strike that we're selling, in the next 32 days. So we're saying there's an 80% chance that you will keep your $550, and that's an annualized return of almost 9%, meaning if you're able to do this month after month for a whole year, you're going to realize about a 9% return just on selling these income strategies. So what we've done is we've automated this process for you, and you can select different strikes as well. So for those of you who like to get more aggressive, you want to sell a lower strike, you can see what those analytics look like. So notice how if I move my strike down to 72.5, now there's only a 65% chance that this option will expire worthless, but notice my annualized return jumps up to 20%. So essentially what you're doing is you're trading off between the probability of expiring worthless for a higher return, or if you want a lower probability of expiring worthless, a higher probability of expiring worthless, you essentially exchange that for a lower return. So this tool allows you to modify any income strategy, see the amount of income you would bring in, see the probability of expiring worthless, your annualized return, and same thing. When you click on the trade button, it will bring you another checklist. This checklist is geared for income strategies, so you'll see slightly different things that we're checking for. We check for probability of expiring worthless, in this particular case 88%, which is great. Annualized return of 3%, this is saying that that's average. However, one thing that you guys should be aware of is earnings dates. So, for example, if there's an earnings between now and expiration, as a covered call seller, you should be aware of that, because that can change the probability of this expiring worthless. So, in this particular case, being that this is a bullish trade, I may be looking twice at this before I place this trade, because there is an earnings between now and expiration. And lastly, we also look at spread on liquidity, just to give you an idea as far as what is your chances of getting in and out of this trade very quickly. So with that, that summarizes the OptionsPlay platform from both I'm bullish, I'm bearish, and income strategies, so that now we've gone through the three examples. You can see how you can very quickly, for any symbol, using the power gauge rating, very quickly find the appropriate option strategies that suits you best, whether you're bullish, bearish, or if you're an income trader. And now I'll turn this back to Marc.
Tony, that was fabulous. Thank you very much. I think everybody on the webinar can see why I called OptionsPlay best in breed when I was talking to Baron. So let's go back to our PowerPoint deck and see some real examples of what Tony was talking about in action. Now, I don't know, I think your mouse sees into the future, Tony, because my next example was Twitter, and somehow you went from entity to Twitter
Okay.
mystically, but I think you knew what was coming, at least the mouse did. So here's a chart of Twitter. Institutions have been selling it. Our dynamic duo of relative strength and power gauge rating has been bearish since May. So if you were long Twitter back then, you would have been out at around 35, looking for put strategies. And where I have that big red arrow, I actually recommended a put strategy on a webinar. And where did I find that strategy? In OptionsPlay. So Twitter at the time was 22, and the very same analysis that Tony was doing yielded a vertical put spread with an OptionsPlay score of 128 and the potential for a 200% return if the stock traded down to 18.5 by the January expiration. And as we saw in the chart above, it did. So plenty of opportunity to use Chaikin and OptionsPlay to find multiple put buying opportunities in Twitter. I mentioned that we had buy and sell signals in Chaikin, 6 pairs. We've seen examples of a couple of them. Here's why you do that. To trade more profitably, you've got to follow the signals. Why? Because it's a disciplined approach to exits and entries. And it's based on proven analytics. So they should give you the conviction to pull the trigger. How many of you have had anything in your mind ready to go and then just not been able to pull the trigger? If you've encountered that, which is something I encountered all through my trading career, please type the letter T into the chat box. And I'm seeing a lot of you typing in the letter T in the chat box, because pulling the trigger is the hardest thing. Usually, to get a good options entry, you want to go against the crowd. So if the stock is in rally mode or bought and it's got a bearish power gauge rating, you want to be buying puts at that point. But that's hard to do. Same way, Tony, you want to go on mute for a second, or Joe, because I'm hearing a little feedback. Thank you. Same thing when you're trying to buy on dips. Have the perfect setup, but if you don't pull the trigger, you're not going to make any money. So a discipline can give you conviction, and it's a heck of a lot better than trading on your emotions. We have a chart of Macy's up here in the very weak retailing group. Power gauge was bearish, and you got a couple of money flow sell signals. Great opportunity. One of them came ahead of earnings. That's what we're going to focus on for the rest of the webinar, how you make money during earnings season and by playing good defense. So how do you find these in Chaikin? Well, we have dashboard alerts in our iPad app, and on the desktop we have a little bell that you click on with the mouse to see the signals in any list, industry group, ETF, market index. We encourage you to create a list called My Stocks. And the list that I use for My Stocks has almost 200 names in it, way too many to follow. But I write a market letter and I do webinars like this, so I want a broad list of stocks to draw from. On January 28th, with a defensive posture already articulated in Chaikin Market Insights for over a month, Amazon came up as a money flow sell signal at a price of 583. LinkedIn had a momentum breakdown at 183. Solar City, momentum breakdown at 33, and you'll see why those are important. But let's zero in on Amazon, a stock that had a neutral power gauge rating, but very strong relative strength. Relative strength sort of stands alone as a technical indicator. If you're a momentum trader, you can trade the stock from the upside, but just be aware if the power gauge rating is not bullish, that means the fundamentals are not supporting it. These are your high-flying stocks in cloud computing, in the social internet space, internet retailers like Amazon. As soon as something goes wrong, and it went wrong in spades with Amazon, you've been on a high wire, you're going to fall off, and there's no safety net. So the power gauge rating for Amazon went bearish on January 11th, 2 weeks ahead of their earnings release. And you see that on the chart. Money flow is negative when you made the high in Amazon. That's a tip we've been teaching institutional investors for over 30 years. When a stock makes a new high, Chaikin money flow should be green, not red. And where you see that red triangle, we had a money flow sell signal on Amazon just 2 days ahead of the earnings report. Notice that you took a little heat if you bought options there. I love to buy options the day earnings are due out after the close. Why? Because very often stocks with a bearish rating will rally into the earnings report. It's an odd combination of wishful thinking and short covering. Wall Street is ever hopeful. So Amazon had a big rally up to 638 the day earnings were due out. Now, we had said in our weekly market letter on the 23rd, buy puts on Amazon ahead of Thursday's earnings report. And we specifically said use strength above $610 to buy put options. Amazon reports earnings after the close, and we've got a little cutout here on CNBC. Amazon missed dramatically, $1 a share versus an estimate of $1.56. They missed on revenues, and Amazon, which had been trading at 638, dropped in a heartbeat to 561, making that put buy incredibly profitable. Now, we got a testimonial a few days later saying, I'm up over $17,000 in 2 weeks. You changed my life. I'm up over $17,000 just with my put option trades on Google, Amazon, and Priceline. It's all from checking the power gauge rating. Chaikin Analytics is a godsend. So thank you, Harry Stone, who gave us permission to use his full name. Usually we just use initials on these. This is an example of how you can make money. And here's what the stock did. The stock dropped dramatically. It didn't just drop to 570, it dropped all the way to 4 65. Imagine how profitable that put trade was just 8 days later. So the Chaikin power gauge gives you the ability to know with a high degree of reliability, not perfection, because nothing works all the time, which stocks are likely to report negative earnings surprises. If you think you know which stocks are likely to report negative earnings surprises based on what I've been teaching on this webinar, please type a big Y in the question box.
And Mark, also to add, when we were showing the OptionsPlay widget, you can use the P&L simulator to not only simulate a price, but also simulate a date, which is very powerful for earnings releases because you can set that expiration date to the day right after earnings, and you could say, what happens if Amazon jumps down $30 right after earnings? Which strategy gives me the highest return? That really allows you to fine-tune which one of those three strategies is best for you on an earnings release. And a lot of times you'll find that call or that put, that middle strategy will actually give you the best return on an earnings release. So that's a great thing to take a look at if you're trying to trade these earnings, is using that P&L simulator and make sure date right after earnings. So you don't have to look at which strategy gives you the highest return at expiration, but actually right after earnings. So you can see that what happens, even if I trade this option just for 1 day, what is my P&L?
And there's a piece of functionality that I wasn't even aware of, so thank you, Tony. The overwhelming majority of you typed Y into the question box, so I think you're getting it. I'm getting through to you that stocks with a bearish power gauge rating are twice as likely to report a negative earnings surprise, and stocks with a bullish power gauge rating are twice as likely to report a positive earnings surprise. That's why we call it your GPS during earnings season. Tony is absolutely right. You can target this to a date. Now I know that. The beauty of the power gauge rating is, instead of assuming that you're going to close out your option the day after earnings are reported if it's profitable, if the power gauge rating's bearish and you put on a put position, you can go out 8 days in that profit simulator and say, well, what happens if I held an option for 8 days? Which is my best put buy? So very powerful combination. Now let's look at how good defense trumps good offense. No pun intended, sorry to interject politics into this webinar. We're going to show you how to turn lemons into lemonade before we get to earnings season and how to make money with options during earnings season. So what do we mean by turning lemons into lemonade? We mean taking stocks with a bearish power gauge rating like Nordstrom, again like Macy's in that retail group that's doing so poorly. The XRT, the retail ETF, is a great trading vehicle. If it's underperforming the market, you can buy puts on it or short it. But stocks with a bearish power gauge rating underperforming the market that are under distribution are ideal put candidates. If you're playing from the long side, you've got a lemon. If you're buying puts, you've got lemonade. And you can see here, just as with Macy's, when we had a little bit of a rally up ahead of earnings. Sorry about that. There's my spooky mouse again. You have the potential to buy a put option and then see the stock gap down as Nordstrom's did from 62 all the way to 48. And by the way, Nordstrom's reports earnings this coming week. It's believe it or not, it's 3 months later, November. Likelihood is another negative earnings surprise. Now let's look at SunEdison. We saw First Solar was our favorite bullish stock in the solar industry. SunEdison is also in that industry, but a totally different picture. Highly leveraged balance sheet, playing tricks with offloading receivables to a related company. Power gauge rating wasn't fooled by those dirty tricks. Turned bearish in mid-July when the stock was around 28. Started underperforming the market a couple of weeks later. Now your dynamic duo is weak. Look at Chaikin money flow. It's been negative the whole way. And a couple of sell signals there were great put buying opportunities. So that's what we mean by playing good defense, getting these stocks out of your portfolios and using them instead as put candidates, turn lemons into lemonade. But now the real heart of this powerful combination of Chaikin Analytics and OptionsPlay. How do you make money during earnings season using options? Now, earnings typically for a company that reports on a calendar year, January, April, July, and October. It spills over into the following months. So this week is the last week of earnings season. It usually starts with Alcoa on a Tuesday and then ends with Walmart on a Thursday. Now, earnings come out in other months as well, but the real opportunities, main opportunities, are January, April, July, and October. And the reason there are opportunities is there's a lot of volatility around options, around earnings reports. And people are spooked by that volatility, and they should be unless they've got something like the Chaikin Power Gauge rating to serve as your GPS. There's also a lot of speculation in the media around earnings. You go on CNBC and there's 5 opinions on either side of the market. Going to beat, going to miss, going to outperform, not sure. Speculation creates opportunity as well. But you need to know if a stock is likely to meet, beat, or disappoint. And the Power Gauge rating is the way to do that. And then you can find winning option trades in that stock in OptionsPlay. So here are some examples. Michael Kors has had a bullish rating since late May, but it's been underperforming the market until recently. There was a oversold buy signal, meaning the stock made a new 8-day low back in January with a bullish Power Gauge rating. And then the stock reported a positive earnings surprise. And look what happened. Analysts had been so bearish on this stock, even though it had a bullish rating, that it jumped up from 38 all the way to 50. Now, Kors happens to be one of the stocks in a new unit investment trust that's been rolled out by First Trust Portfolios, the largest creator of unit investment trusts. They asked us to help them roll out a low beta growth strategy using large cap stocks. And Michael Kors passed by our very disciplined rules-based methodology. And lo and behold, you sometimes get lucky. Someone once said the better prepared you are, the luckier you get. That was Thomas Jefferson. We got lucky, and in this 20-stock portfolio, Michael Kors reported a positive earnings surprise. That's the power of options. If you bought options on Michael Kors ahead of that earnings report, huge percentage gains in the stock, the largest gainer in the S&P that week out of 500 stocks, and something that our computer programs found for this low beta growth unit investment trust. On the other hand, here's Fortinet. Excuse me one second. Fortinet's been bearish. Power Gauge turned bearish in August. The stock was around 42. Started underperforming the market at around 34 in October. The stock dropped 50%. And along the way, there were some sell indications. Now, notice there was a sell signal right here in late January, early February, right ahead of a gap up after earnings. So let's see how this could have affected you. Well, we got a testimonial from Brian N. who said, I could have saved $18,000. I was at your booth in San Antonio. This was at the Option Monster Invest Like a Monster conference with John Najarian. Actually, they asked my wife Sandy to speak instead of me, and so I was the booth boy there while Sandy was wowing him on stage. But in October, Brian came up to our booth and asked us to pull up a chart on Fortinet. The software said sell, but I was a firm believer that it was going up and bought calls instead. Had I listened, I could have saved $18,000. We just got that testimonial in recently. But more importantly, you could have actually made money, because we made Fortinet our bearish stock of the week on January 24th ahead of that earnings report. Now, the following week, this is really critical, because you can't just abandon a position because it goes against you for a day or two. The following week, we had this to say: Last week's bearish stock of the week, Fortinet, reported earnings after the close on Thursday, finishing the week at 28.14, up a mere 1.4%. It closed significantly below its after-hours high of 31. An overbought sell signal was triggered on Friday's rally. Stay short with a closing stop of 31. Now, look what happened. The stock dropped all the way to 23 and change. So not only is the initial recommendation important, but Chaikin gives you the ability to hang in there by providing support and resistance levels with our moving averages and volatility bands and our overbought, oversold indicator, and then also the power gauge and relative strength. Now let's look at some real disasters where you could have used the Chaikin power gauge and this particular combination that we call the dynamic duo and our signals to buy put options ahead of some disastrous earnings reports. So here's Tableau software, symbol is data. There was a sell signal about 2 weeks before the earnings were due out. It got overbought. Notice how it rallied right here at the top. Oops. Very, very jumpy mouse. Notice how it rallied over here. I gotta go gingerly. To $80 ahead of the earnings report, from 70 to 80 in a week. And they disappointed big time, and that stock was down 50%. Now, can you envision how profitable a put option that you bought either in early January or right before earnings would have been with a 50% drop in the stock? 1,000% or more. Makes up for a lot of small losses, and that's why this combination is so potent during earnings season. Now, LinkedIn is another stock where we actually went out and said sell this stock ahead of earnings. It had triggered a reversal sell signal. The power gauge had turned bearish. The institutions were selling it. It was underperforming the market. This is your perfect setup. And this is another stock that dropped 50%, from over 200 to under 100 based on negative earnings surprise, terrible guidance, overpriced stock. It's just a combination that cries out for a good put trade. Beauty of puts, as Tony said, is you can only lose the cost of the put option. So you know what your risk is. Don't put too much into any one trade. But be aware that when you find the LinkedIns and the Tableaus of the world, you're going to make outsized returns, anywhere from 500 to 2,000%, which make up for a lot of the times where the company doesn't surprise and doesn't give you that profit and you have to take a significant loss. You'd only need about 1 out of 3 trades like a LinkedIn or a Tableau to make up for a lot of small losses, and you'll still be way ahead of the game. So Chaikin Analytics is really your fast track to financial freedom. You can trade better, you can grow your 401k or IRA nest egg, and it now includes our stock screener, which helps you find the stocks that are reporting earnings this coming week, and OptionsPlay. We got this testimonial from JD, who said, "I'm writing to tell you how absolutely incredible Chaikin Analytics has become. Thank you for making my life easier. It started out great, but with the options and screener additions, I feel it's the best product on the market. I've recommended all my investing friends." So thank you, JD, for that one. Now, one final example in the options area goes back a bit to July of 2015 when we put out a bearish stock of the week recommendation on Yelp. And this was easy because look back and you see 2 gaps there in April and then in January. They had already reported 2 quarters of negative earnings surprises. And we had gotten a sell signal, a money flow sell in July right ahead of the earnings report. So we made this our bearish stock of the week, expecting that they would report yet again a negative earnings surprise. And they did, and the stock dropped 28%. We got this testimonial from Mike T. Netted $17,400 profit this morning. I found more success in the past 2 weeks using Chaikin than I've had the rest of the year. I had the biggest winner of the year today on Yelp earnings based on Marc's bearish play of the week, risk 7,000, netted 17,000. Now, Mike actually sent us his trade blotter. I think this is from Interactive Brokers. And he's obviously a more sophisticated options trader. He put on 3 different put positions, different expirations, different strikes. Using OptionsPlay, you don't have to be as sophisticated as Mike T. You're going to find the right options position based on probabilities and risk-reward ratios that match up with that bearish power gauge rating. Chaikin Analytics is normally $1,950. We'd like as many of you as possible to experience the power of Chaikin Analytics, so we've got a webinar special, call it your President's Day special, taking $200 off the cost of Chaikin Analytics, reducing the price to $1,750. Now, this is one slide I didn't change. Go to chaikinanalytics.com/options, not earnings, to get that $200 discount. And this expires on Wednesday, midnight, February 17th. So 2.5 days to take advantage of this offer. Now, what do you get for $1,750? You get to turbocharge your profits with all this added value. Our Market Insights weekly newsletter, where you had ideas like Yelp and the IWM trade. Most importantly, small group tutorials to help get you set up, knowledgeable, and start using all the features. Headed up by Joe Bicella, who's our webinar organizer today. You get up to speed very quickly. You've got OptionsPlay integrated. You've seen the power of that. And then you get my colleague John Schlitz's daily morning insights. Comes in your inbox before the opening. You know what the futures are doing overnight. You don't get caught up in that August 24th market order madness where people got completely destroyed by terrible executions on ETF trades that they put in. You know what the overnight markets are doing in Europe and Asia, and there's a daily stock of the week, either bullish or bearish. So terrific market technician, John Schlitz, my colleague for over 20 years, joined us over a year ago. It's a powerful package, folks. This is something you need to consider adding to your arsenal. And one final testimonial, 10x return in 5 days. In the 5 business days that I've been using Chaikin Analytics, I've paid for the subscription over 10-fold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And this is really a team effort. From sales to marketing to the people who helped me create the webinar decks to Joe Bicella and his customer satisfaction team, which we've just added to. We're dedicated to your success. It's a team effort. So I'd like to make it even more attractive for you to subscribe to Chaikin Analytics. If you subscribe by midnight tonight, we'll take an additional $100 off the cost of Chaikin Analytics, reducing the price to only $1,650. And as an added bonus, for the first 7 people who subscribe this afternoon, you'll get a one-on-one half-hour telephone consultation with me after you've gotten the onboarding session so you're familiar with the system. Now, if I'm willing to take 3.5 hours out of my work week to talk to you, are you willing to take 3.5 hours to learn about Chaikin Analytics from our customer onboarding team? If you are, by all means, subscribe today to Chaikin Analytics for only $1,650 and be one of those first 7 people to get that telephone consultation. I can tell you it's been great for me to be on those one-on-ones, and I think it's been very valuable for the people who've been on the receiving end of that. Chaikin Analytics can really pull it all together for you. With OptionsPlay integrated, it's just a fabulous value. You owe it to yourself. In fact, I'm going to end the webinar with one question. If all Chaikin Analytics could do for you was to help you find that put trade in Yelp or the IWM, how much would that be worth to you? If it helped you avoid the Kinder Morgans and the LinkedIns and the Tableaus of the world, get them out of your 401k plan or stop trading them from the long side if you're a swing trader, wouldn't that be worth many times the $1,650? If you agree with me, please subscribe today and take advantage of this special offer and the offer of a free half-hour phone consultation for the first 7 people who subscribe. ChaikinAnalytics.com/options. I'd like to thank you all for taking time out of your holiday to listen to the valuable insights from Tony Zhang. Thank you, Tony. And I'll turn it back to Joe Bicella to wind down the webinar.
All right, great. Thanks much. Just responding to a few more questions here. I know there was a lot of questions regarding subscription. Just to clarify for anyone else who may not have chatted in, the offer that Marc currently stands is for $16.50 before midnight tonight. That would be a one-time payment for 12 months, so a full year, 12 months worth of access to Chaikin Analytics. So. All right, as mentioned at the beginning of the webinar today, we have recorded today's session. So we are going to send a recording of that, I believe, either tonight or tomorrow morning. So we'll make sure to get a copy of that to you. The contact information for how to get in touch with us is on your screen right now, 877-697-6783, or check us out at chaikinanalytics.com/options, or send us an email, sales@chaikinanalytics.com. So I want to go ahead and thank Marc as well as Tony for spending their President's Day holiday with us today. Everyone, if you're on the East Coast, have a safe ride home. I know it's a pretty rough weather out there, but again, have a great afternoon, and we'll see you tomorrow for an onboard session.